welcome back for my final morning report analysis video on Friday 16th of November with me, Richard Perry, market analyst at Hantec Markets. Looking at gold, which has again ticked higher today. There is a very slight run of higher lows. You can draw in a trend line here over the past sort of couple of weeks, and higher highs, which is sort of edging towards a test of 1291, which is where this sort of pivot line is. So the market is sort of drifting towards that, and you can see this being reflected in the momentum indicators. RSI just ticking slightly higher. MACD lines again also slightly higher. Stochastics-ish. But there is virtually nothing in this market. I mean, if you're going to play this on a very short-term basis, you're going to have to wait for a correction. I think otherwise, correction back towards those lows. You had yesterday's low, 74.90. But I mean, if you look at the candles over the last 3 days, a bull candle, bear candle, and then doji. So the whole sort of array of range of sort of candles that you can get really in 3 days. And we are higher on the day today. Is it going to be sustainable? Is it going to push higher? Well, as I said, 1275 initial low. 1270.50 I suppose is arguably the low near term. But yeah, I mean, just sort of up towards the sort of 70 mark, not a million miles off 70 mark on the RSI, and again that has been limiting, sort of oscillating between 30 and 70. So again, that sort of limits upside potential on an immediate term basis. So arguably you have to sort of really wait for a bit of a little retracement. Just makes trading gold, I think, still very difficult. Big overhead supply between 1290, 1300 and 1310. And I'm not expecting too much traction in this rally. I think it's going to be very much a mixed market for the time to come. So I wish you good luck in your trading today, and I will speak to you again next week. Thank you.